So I was taking a look at Under Armour recently, and it's a company that from time to time I've taken a look at it, but I've never really invested into it. And the current setup got me intrigued because, if you take a quick glance at it, it's really bullish, I would say. We see a sharp decline since December 24 because that is the moment that they became unprofitable. All right. Uh, but from then on, they they have they have touched this place here twice. And if you take a look at the indicators, which we will do right now, always love to see these two side by side. So both RSIs are telling us that we are in oversold territory, right? So this is bullish. We are currently facing this support area from some time before, which I will place right here. And imagine if it goes back to where it was, this is a good range. You can see this range is a comfortable place for this price. So a correction to the range would be a 50% profit or a 32% profit, somewhere in between. All right, so that's pretty good. I'll just gonna place the range right here so you can actually take a look. I'm gonna make this one green because it's bullish, right? So this is the range that we're looking at. And much like the other time when it fell off and then came back to the range, it also goes up and goes back to the range. Uh, it's a quite possible that it will just go back. Now let's see other indicators. I like to see the MACD combined with ATR because sometimes they allow us to see more things than we could. So if you zoom in, we can see that the MACD is a bit on the bullish side because the lines are below zero. But it's starting to snake and the histogram is just starting to die off. So we are seeing a moment of low volatility, and you can see that in the price. The price is settling in and it's just cruising around this support area. At the same time, ATR is going down and down, and it's as lowest that it's been for a long time. Really, haven't been there since May 24. Right. So what this indicates is that we're seeing a consolidation, but also we're seeing a springboard for movement. And if you take a look at the volume here, it's interesting because since this drop, volume has been a lot more active on this company than before. And what this indicates me is that it's catching the interest of the market. So more people are coming in and buying and selling, but they're really indecisive because they've been fighting over it. You can see that in some days the price tries to go up, but then it goes down. So big jumps that are quickly corrected. So we have here a tug of war between buyers and sellers. But sellers can't last forever because at some point you'll run out of people to sell this thing, and then buyers will take on, and I'm pretty sure they'll bring the price back up to this safe range right here, right? So if the price was here, I would say don't buy this. In fact, I never bought this company. Disclaimer, I never bought this company, but I'm interested in it right now. But as always, I will not simply look at it from a technical standpoint. Let's take a look at the fundamentals together and see what we're having here. So this company is not very large, it's 2 billion market cap with a PE of 20, which is borderline acceptable, but we'll take a look at that in a moment. So this is their big problem, is that from Q3 24 they were roughly unprofitable, and now for 2 quarters they've been unprofitable. You see, with some increase in profitability. You can see minus 5% to 0.2%. All right, it's fair. It's almost borderline profitable versus unprofitable. What I like to see here is that the cost of goods sold is not as big as it could be. So it's basically half their revenue, which leaves some room to breathe and some room to grow. And another thing that I like to see is their debt, and that's a bit more problematic. So as we see, it far outweighs free cash flow, right? They have cash on hand, and remember, when you take into account the metrics, the cash on hand basically nullifies the debt. But here's the problem: that when you go to statements and you take a look, I always like to include free cash flow. They have cash on hand right now, and it's here, this orange bar, cash from financing activities. So the cash they have now has came from taking on debt. So that cash is debt. They just kept it stored. So, and that's a bit problematic. When I look at this company, and we can look at the annual overview maybe, you can see that free cash flow was okay until 21. So this is obviously, they are victims of recession. So we are living through a recession basically, and people are not buying as much clothes as they are. So they thrift around, they buy secondhand things, they keep on to their clothes as long as possible to save on money. And the fashion industry has suffered through it. You can see the cash flow clearly decline, and there has been no signs of going back, right? Uh, and if you take a look at the quarterly one again, you can see they are taking on debt. Uh, they are just slightly repaid a bit of there, but not much. Free cash flow has been more negative than positive, which is not good. And what I also see is that they have debt, but look at the cash from investing activities. Barely noticeable. So this company is almost dead in the water. That's not good. There has been no investment on its part. So they are taking on debt. Let's see what they're going to do with this one. Because here they took on some debt, but they didn't invest that much with it. And I know that it takes time, maybe seeing in an annual view, but I mean, ever since 2018-19, they haven't been investing in themselves that much. So how can you improve your business? So we here have two plays for this. Either we go for valuation and we say, as they currently are, they are undervalued, and I would say probably. But for growth, where does this company goes in the future? I would say they are pretty much static. So you can go in for a quick snatch on a underpriced company, but I wouldn't say this is a market beater for any reason. So what I want to see now is their PE ratio, but I got this nifty little screen here where I want to compare them with the rest of the fashion industry or apparel industry, basically. So remember, their PE is like 20, and if you take a look, it's not bad compared to their competition. This is by market cap, so our little 2 billion companies right around here. There they are. There's a little symbol there. So 20, you can see some of the competition can offer up some better options for price to earnings. But again, price to earnings by itself doesn't mean anything. It just means that currently the markets are not pricing in this company as valuable. It can be for a lot of reasons. It can be because the company is unnoticed and they are a little hidden gem. But it also can be that the market senses weaknesses and have retreated, and thus their PE ratio has fallen, which seems to be good, but at the same time, that's actually a mark of weakness. Because if you take a look, for example, Hermes here, huge company, their PE is much higher, right? But if you take a look, the industry average is a bit around where Under Armour is. Maybe they are on the lower side, but I would say it's passable. So uh, overall, I would say fundamentally this company is okayish, but not the best. But in terms of technical analysis, they are an opportunity for the moment. I would say I wouldn't be surprised if this company would come right around here, and they would just careen around here for some time, right? And you can probably, if I take a look at, where is it? Right here. You will probably see that the volume, this is where it lies. You see? So this is where the price likes to hang out. So there is like, it's a magnet, it pulls the price in. This is where the company wants to be. So this is their, probably their fair value. It's around this area. Of course, as they have become less profitable, the fair value might have been come down for around this area. Maybe. Like this line right here might be a reality. Overall, I might give this one a try and see how things go in a couple months or a couple of years. Um, I mean, it's one of those plays where I can see little downside, but some potential upside. So that's nothing to turn down, right? So see you around there.